Hello, everyone, and welcome to the latest episode of Trader Talks. The title always gives it away, but today we're going to talk about Netflix, who had their earnings out last night, and there's been a bit of a reaction this morning, so we'll get through all of that. But please do remember to like, share, subscribe, drop a comment if you are on YouTube, and if you're on the podcast and you want to find the YouTube link, it is in the bio. Hope everyone is doing well, and also do take a moment just to have a quick look over the disclaimer and remember that the presentation is for educational purposes only, should not be taken as investment advice, personal recommendation, or an offer or solicitation to buy or sell any financial instruments. Right, let's have a quick look then at Netflix. As of right now, it's trading about 9.5% lower, trading at 97.54, and it traded yesterday evening at 108.93. The report, as always for these size companies, are out after the market close, so that was about just after 9 p.m. in the UK. And as I said, shares have come under pressure. Netflix did keep its full year guidance unchanged, which probably just disappointed investors a little bit. Guidance for quarter two EPS missed, however, 0.78 versus 0.84 expected. And if we take out the $2.8 billion breakup fee, which they got from the Warner Brothers deal, that caused the EPS to be plus 60% year over year. They actually missed EPS by about 2 cents there. So something just to bear in mind. Also, the revenue was slightly higher, which is good. So I think on the face of it, it was actually not a bad report, but maybe the next point I'm going to discuss was one of the reasons that Netflix has come under the pressure it has. The company also said co-founder Reed Hastings will not seek re-election to the board in June. We're certainly in a moment where companies or investors don't like seeing companies, founders stepping away from the board. They don't like to see important leaders leaving the company. And also, just a final thing, TikTok style vertical video discovery feed will launch at the end of April. Something to keep an eye on there. The main point for me heading into this earnings was, and we'll just go quickly to the chart here, is this move higher. And at the moment on the podcast, I'm talking about the move sort of end of February, early March, all started when it was announced that the Warner Brothers deal had fallen through. It was really weighing on price for the previous months. So the point I'm now making is we've had a decent run high, about a 45% run higher from the low. We headed into this earnings maybe with real great expectation. And the fact that we had a slight miss, the fact that the co-founder is stepping down, it's just going to weigh on things a little bit. So I completely understand it. But let's talk about some of those technical levels. I mentioned on a podcast, or on a webinar, sorry, that we do on Monday, that this was a very, very important level, about around 105, 108. And we, for where we closed the week, and we just couldn't quite get above this point. And I was going to say, or I was saying to people on the channel, on the webinar, that if we close the week above that, then great for investors. And you imagine we start to make a push towards the sort of the highs again. We haven't done that. We've come under obviously some pretty big pressure yesterday. We're a little bit lower today. The sort of area I'd be watching for the rest of the week and maybe next week as well is around sort of 95, 90. And the reason for that is just the importance of the interaction that we've had in and around this area historically, whether it be support or resistance. So X kind of marks the spot here, I would say, for Netflix at 94.50. Yes, you do have a bit of support below as well, but that would be an area where maybe dip buyers could be interested if we close the week above that. I think anything in between 94 and 105 is going to be tricky to navigate, but ultimately those are going to probably be the sort of the key levels for now. Naturally, if we do continue to move lower, just going to mark up a couple of points. 89.63 would obviously be an important area, as would 82.73, where we've had good reaction before. Let's have a quick look at the moving averages. Let's see if there's anything worth having on there. The 200-day, we hit it as resistance, didn't quite get above that. And you'd imagine the 100-day moving average is not too far away. So you've got a couple of that are maybe worth keeping a bit of an eye on. I'm just going to leave the 50-day moving average on there. I think 94.90 remains a key level to the downside where dip buyers as a whole will want to defend that. Below there, then yeah, why can't we start moving back down to the lows that we saw earlier this year where the recovery started? And yeah, I think the overall, the co-founders stepping down, slight miss of expectation. The Warner Brother deal maybe masked a little bit of the positivity as well. So yeah, I'd be interested to hear what you all think. Do you think actually, this is a dip that's attractive? It's a stock that retail like, they bought the dip on as well. And maybe it's an opportunity to do that. Or is it something you want to leave alone for now? Just put on a trend line from the all-time high to where we are now. It's by no means absolutely perfect, but you can see here we had some good interaction on there. So maybe down the line, worth just coming back to this video or marking it up yourself for any potential move to the upside. It can't really kick on until you get a break of that trend line and then start to target some of those highs before you get to the all-time high as well. Let me know your thoughts. Let me know what you want to see next. Big earnings season coming up, so plenty of charts to go through. Let me know if you want anything in particular. Take care, everyone. See you.